Imagine a company that's quietly building the very foundation of this whole AI revolution, making sure the world's biggest tech trends have the essential hardware they need to thrive. Today, we're taking a deep dive into the latest financial results of just such a company, Supermicro Computer, Inc., better known as Supermicro.
Right.
Our mission for this deep dive is pretty straightforward. We're going to unpack their recent performance, explore what their CEO is focused on, and reveal some maybe surprising financial shifts. It should give you a really clear, well-informed picture of a key player in this booming AI infrastructure space. So yeah, let's get into it.
Okay. And to really appreciate Supermicro's journey, I think we should first understand their unique position in the market. They're definitely more than just a hardware vendor. They actually brand themselves as a total IT solution provider.
Okay, total IT solution provider. What does that actually mean in practice?
Well, it means they're offering complete application-optimized solutions, and these are specifically designed for the incredibly demanding needs of AI, cloud computing, high-performance storage, and even newer areas like 5G and edge computing. Their real edge, they say, comes from what they call first-to-market innovation, basically delivering cutting-edge tech really quickly.
And that first-to-market idea, that really connects with their server building block solutions, doesn't it?
Yeah.
From what I understand, it's a highly modular approach that must offer, well, incredible flexibility.
It absolutely does. I mean, think of it like a sophisticated high-performance Lego set, but for data centers.
Okay.
It's really all about empowering customers to precisely optimize their systems for very specific workloads. They offer this huge array of flexible, reusable building blocks, covering everything from the latest processors and memory to powerful GPUs, specialized storage, high-speed networking, and even advanced power and liquid cooling solutions.
Wow.
So this modularity, it allows for just unparalleled customization, and it significantly reduces the lead time for, highly specialized infrastructure deployments.
Right, speed is key.
Exactly. Plus, they're deeply committed to green computing, which aims to reduce environmental impact and improve the total cost of ownership, or TCO, for their clients. That's a pretty significant factor in these large-scale deployments.
That adaptability sounds like a crucial differentiator in such a fast-moving space. So with that context, let's dive into their most recent financial figures. Supermicro just announced their unaudited results for their fourth quarter of fiscal year 2025, ending June 30th. And these numbers, they show a pretty remarkable trajectory.
Yeah.
Net sales hit $5.8 billion.
$5.8 billion.
Yeah. To put that in perspective, that's a significant jump from the prior quarter, Q3 25, which was $4.6 billion. And it's even up from the same quarter last year, Q4 24, which was at $5.4 billion. So it's a consistent upward trend, clearly demonstrating sustained demand.
It certainly signals robust demand, particularly within the AI infrastructure sector, which, let's face it, remains incredibly hot right now. However, while sales are strong, we also need to look at their gross margin for Q4 25. It came in at 9.5%.
9.5%.
Yeah, that's a slight dip compared to 9.6% in Q3 of 25 and 10.2% back in Q4 24. Now, while the percentage shift is small, it is worth noting things like, increased competition, maybe changes in their product mix towards lower margin components, or even just rapid scaling costs could influence this. It's definitely a key metric to watch.
Okay. And looking at profitability, their GAAP net income for Q4 25 was $195 million. That translated to 0.31 diluted net income per common share.
Right.
This represents good sequential growth from Q3 25, where they recorded $109 million in net income and 0.17 earnings per share, or EPS.
So quarter over quarter is up.
Exactly. But it was down from Q4 2024's $297 million net income and $0.46 EPS. So yeah, while that quarter-over-quarter growth is strong, the year-over-year comparison shows a bit of a mixed picture. Suggests maybe some profitability compression despite those higher sales.
Exactly. That's a good way to put it. But one of the, I think, most compelling indicators of their operational health in Q4 25 was the cash flow from operations. They generated an incredibly robust $864 million in cash flow just in that single quarter.
Wow, $864 million from operations.
Yeah. This is a really powerful sign of their efficiency and liquidity. It shows they're not just generating sales, but effectively converting those sales into actual usable cash. And that's vital for funding future growth without, relying too much on external capital.
That's a huge positive.
Okay.
But to truly grasp the magnitude of Supermicro's performance, we really need to zoom out and look at the full fiscal year 2025.
Yeah.
And this is where the story gets even more compelling, I think.
Agreed.
For the entire fiscal year ended June 30, 2025, Supermicro hit net sales of $22.0 billion.
$22 billion.
Just think about that. $22 billion. This is a truly substantial leap from $15.0 billion in fiscal year 2024. That represents an astonishing 47% annual growth rate. This isn't just, normal growth. It's the kind of exponential growth that positions a company as a critical enabler within a booming industry.
Absolutely. That kind of growth rate is, well, it's directly attributable to what their CEO, Charles Liang, proudly describes as their AI solution leadership. He specifically highlighted strong growth across various customer segments. You've got Neoclouds, which are these next-gen, often specialized cloud providers focusing intensely on AI.
Right, the AI-focused one.
Yeah. Then traditional cloud service providers, or CSPs, large enterprises, and even sovereign entities, which refers to government-backed initiatives building up national AI capabilities. This broad penetration across diverse and frankly demanding clients just underscores their strategic importance in this global AI build-out.
And Liang sounds particularly enthusiastic about their new data center building block solutions, or DCBBS. He emphasized their exceptional value for customers looking for faster data center deployment and significant time to online advantages. How does that translate into like a tangible benefit for a client?
Oh, it's a game changer. Seriously. Imagine trying to deploy a massive, complex data center in this rapidly evolving tech landscape. DCBBS offers these pre-validated integrated systems that essentially slash deployment times from, say, months down to maybe mere weeks.
Weeks instead of months. It's huge.
It is. This streamlined approach is absolutely critical in the fast-moving AI field where, speed to market can mean the difference between leading and lagging behind. Looking ahead, Liang also pointed to several strategic initiatives fueling future growth. These include expanding global operations.
Smart move with tariffs and everything.
Exactly, to help mitigate tariffs and regional costs. Very smart move in the current geopolitical climate. They're also actively growing their enterprise customer base, which shows healthy diversification beyond just the biggest cloud providers. And of course, they're continually innovating their AI product lines.
And here's an ambitious target he mentioned. Their aim to expand their large-scale data center customers from 4 in fiscal year 2025 to between 6 and 8 in fiscal year 2026.
Right.
That's a significant planned increase in their top-tier client base. Hints at deeper strategic partnerships.
It's definitely aggressive, but it feels like a logical goal, considering the just insatiable demand for scalable AI infrastructure right now. Now, let's maybe talk about something that can often cause confusion when you're digging into financial results. The difference between GAAP and non-GAAP numbers.
Yes, the GAAP versus non-GAAP dance.
Exactly. Companies often present both, and understanding why can offer a much clearer picture. Basically, non-GAAP measures aim to show the core operating results by excluding certain items that aren't necessarily reflective of ongoing day-to-day business operations.
So it's like trying to get a cleaner picture of the recurring business, stripping out maybe the one-off charges or things that aren't actual cash expenses. Is that the idea?
That's precisely the idea. And for Supermicro, in fiscal year 2025, this distinction is particularly illuminating. Their GAAP net income for the full year was $1.0 billion, or 1.68 diluted EPS, and that was actually down from fiscal year 2024.
Down, okay.
But their non-GAAP net income for FY25 was $1.3 billion, or 2.06 diluted EPS, which was relatively flat compared to FY24.
Okay, that is a pretty significant difference. What exactly is causing such a divergence between those two figures? What are they stripping out?
Well, the primary adjustment is stock-based compensation.
Right, stock options and grants.
Exactly. And it's a significant non-cash expense, meaning, no actual cash leaves the building. For FY25, it totaled a substantial $314.5 million.
Wow.
Yeah, and that was up from $231.5 million in FY24. So, since it's non-cash and can fluctuate based on market forces and employee equity awards, excluding it provides a cleaner view of the company's core profitability without that specific variability.
Okay, so that's the big one. And there was another smaller adjustment as well, right?
Yeah, yes. There was also a loss on the extinguishment of convertible notes, totaling about $30.3 million in FY25. This is considered a non-recurring kind of financing-related charge, not something that happens every quarter as part of their main business.
Got it.
So the key takeaway here really is that the non-GAAP figures offer a perspective on the business's fundamental strength and ongoing operational performance without the impact of these specific non-operating or non-cash items. It helps you see the underlying business more clearly, especially when you're analyzing trends over time.
That truly helps connect the dots on their profitability picture. Okay, speaking of financial health, let's talk about their cash flow story, because this is a major turnaround. It really underscores their operational strength. We saw that robust cash flow in Q4, but looking at the full year, the shift is just dramatic.
It really is.
Supermicro reported a positive $1.66 billion in cash flow provided by operations in fiscal year 2025. Now, here's the kicker. That's compared to a negative $2.49 billion in fiscal year 2024.
Wow.
A negative $2.49 billion to a positive $1.66 billion. It's a remarkable swing of over $4 billion.
That is an incredibly powerful signal of, well, improved financial discipline and efficiency, no question. It means the company has significantly enhanced its working capital management and is generating a substantial amount of cash directly from its core business activity.
Right.
This turnaround, it indicates healthier operations and strong cash generation, which is just fundamental for any high-growth company, especially one in a capital-intensive industry like hardware infrastructure. It allows them to self-fund a significant portion of their, aggressive expansion plans, reducing reliance on external capital and strengthening their balance sheet overall.
And what does that translate to in their current financial position, like as of the end of the fiscal year, June 30th?
Well, as of that date, Supermicro held a pretty robust $5.2 billion in cash and cash equivalents.
Okay, solid cash position.
Very solid. Their total bank debt and convertible notes stood at $4.8 billion. Now, it is worth noting the significant increase in those convertible notes. They went from $1.7 billion in FY24 up to $4.6 billion in FY25.
Big jump in convertible debt.
Yeah, it indicates they've raised significant capital through these instruments, most likely to fuel their aggressive growth and expansion plans in this burgeoning AI market. This cash position gives them considerable flexibility for future investments, acquisitions, strategic maneuvers, you name it.
Okay, so they're sitting on a good chunk of cash. They've actively raised capital to fuel their ambitions. Now let's look ahead. What's the outlook for fiscal year 2026? What can we expect?
All right, so for the first quarter of fiscal year 2026, that's the one ending September 30, 2025, Supermicro is projecting net sales between $6.0 billion and $7.0 billion.
It's a $7 billion for Q1.
Right, and their non-GAAP diluted EPS is expected to range from $0.40 to 52 cents.
Okay, and for the full fiscal year 2026, that's the big picture view.
For the full year, they are anticipating net sales of at least $33.0 billion.
For at least $33 billion.
Yeah, that at least really signals continued aggressive growth expectations. It demonstrates their clear confidence in the sustained, just insatiable demand for AI infrastructure. This is clearly a company that is not just adapting to the AI boom, but is actively shaping its foundational hardware needs.
Of course, as with any forward-looking statement from a company, it's important for you, the listener, to remember that these are projections. They're subject to certain risks and uncertainties that Supermicro themselves outline.
Yeah.
Things like fluctuating operating results, potential customer concentration risk, and broader economic conditions, including the ongoing impact of tariffs.
Absolutely. The future is never a perfectly straight line, but the direction they're pointing towards is certainly ambitious, and it feels very reflective of the current AI build-out cycle we're in.
So we've just taken a deep dive into Supermicro's latest financial results. It reveals a company that's not just growing rapidly, but is actively shaping the very infrastructure of the AI future. From their impressive sales growth and strategic initiatives like their data center building block solutions to that truly remarkable turnaround in operating cash flow, Supermicro's numbers paint a compelling picture of a dynamic and, frankly, strategically vital player. We also explored why those non-GAAP adjustments can offer you a clearer view of their core, ongoing performance. So, you now have a unique shortcut to understanding the complex financial health and strategic direction of a critical component supplier in today's tech landscape.
Yeah, this kind of detailed analysis really offers you a direct look into, well, the engine room of the AI revolution, showing how that financial health fuels technological progress.
So as AI continues to redefine industries at just an accelerating pace, it makes you wonder, what other picks and shovels companies, the ones like Supermicro, might be quietly building the essential foundations for our future? And maybe more importantly, what will their next earnings call reveal about where we're truly headed?